Welcome to Module 6. As I have tried to make abundantly clear on the Blackboard site, this video and the next video are designed to be a review of material that you should have learned in your Fundamental Managerial Accounting course before you reach this point. To the extent you're not as familiar with the materials as you might want to be, I suggest watching both this video, M3A, and the next video, M4A. You're definitely responsible for knowing it. So why not? Here are the Module 6 learning objectives. We're going to demonstrate how costs flow through accounts and prepare and interpret an income statement for a manufacturing or retail business. We'll explain the flow of costs in a job costing system. You'll be able to contrast the activity-based costing system with job costing. And we use an activity-based approach to analyze customer profitability. And then lastly, we'll apply cost volume profit analysis for analysis. Okay, so when we think about cost accounting, one of the obvious problems that we have to deal with is product costing. And so let's think about a hamburger that you might get at McDonald's. So first we can consider the direct materials that go into that hamburger. So a hamburger patty, mustard, ketchup, onions, pickles, and buns. And all those are direct materials, right? We can tie some amount or one item to each object, and the object in this case would be the hamburger. Direct labor is a little bit more difficult because obviously we probably pay the folks at McDonald's $11.50, $12 an hour, something like that. And we would need to divide that by the number of burgers they could make per hour to tie each one to a specific product. And then lastly, we're left with this cornucopia of indirect costs. So there are things like indirect labor, for example, the cost of the cashier that rings up the burger, the drive-through operator, and then, the folks that sweep the floor at night to keep the place clean. Those are all indirect costs that need to be associated with our cost object, the hamburger. Then there are a ton of other indirect costs. So for example, how about the electricity to keep the lights on? The cost of the grill, the cost of the freezer that keeps the hamburger patty and the other condiments cold or cool and therefore safe to eat. And how about the furniture and fixtures inside the McDonald's? So really you can see that the challenge here is trying to determine the actual cost of the burger requires more than just grouping together the direct materials cost and the direct labor cost. So cost accounting follows a process of creating cost pools and then assigning those cost pools based on some cost driver. So what is a cost driver? That's a factor that changes the cost. But to me, more importantly, it's a factor that links the cost directly to the product. Let me rephrase that. It shouldn't be directly to the product because sometimes it's an indirect link. So with the cashier, there's no direct link from ringing up the order to the product, but there is indirect cost associated with that, right? If you don't have a cashier to take the order and charge the customer, you're not going to sell any hamburgers. So you would do some sort of hourly wage and determine what's the average number of orders that a cashier can make per hour, and then you could allocate that cost down to the object, which is the burger. Same with the grill, right? So the grill costs money. So what happens is we depreciate that grill over time. And how do we allocate the cost of that depreciation? Well, you could determine the number of patties that could be cooked on the grill and then per hour and then allocate that cost out, right? So a unit product cost is a cost that can be linked to the number of units of product. So a cost object, which is language I've already used, is any product, service, customer activity, or organizational unit to which costs are assigned for some management purpose. Right? So a cost object is the object of a cost, right? Which I know isn't a great definition, but is absolutely true. So the process of assigning cost to cost pools or from cost pools to cost objects, right? That's what cost accounting is. And direct costs are great because they're conveniently and economically traced to a cost pool or cost object, right? So the cost of the hamburger patty, pretty easily traced to the cost object of the hamburger. Indirect costs cannot be traced conveniently or economically to a cost pool or a cost object. So for example, we had listed mustard and ketchup as direct costs, and they are direct costs, but it may be that it's not economical to allocate a squirt of mustard or a squirt of ketchup to each burger. And so instead we treat that as an indirect cost and allocate it through some other form. So cost allocation is the assignment of indirect costs to cost pools and cost objects through the use of cost drivers. And these cost drivers are often called allocation bases. So for example, when we think about what is the cost pool, and what is the object? So electricity, we might lump into facility costs, right? So that's kind of this group of costs that covers the cost to operate the facility. And then what is the object? Well, it could be the hamburger we've talked about, or a shake, or some fries. And what about the grill? So the grill we could group into a cost pool called kitchen costs. And then we could allocate those kitchen costs to things like burgers or fries or whatever they might be that we make in the kitchen. And then lastly, we think about the costs associated with the cashier. And maybe we lump that into a cost pool called order costs. And then we allocate order costs to each burger, shake, and fries. So direct material costs are the cost of materials that can be readily traced to outputs. So that's typically the purchase price of the materials plus any freight you have to pay to get them there, minus any purchase discounts, plus a reasonable allowance for scrap and defective units, because obviously probably not every hamburger patty can get used, right? Maybe some are damaged, there's only half a patty, whatever it might be. That cost is still direct material cost that needs to be allocated into the cost of each burger. Indirect material costs, for example, are the cost of materials that can't be readily traced to outputs. So in a manufacturing, you'd think of that as rags, lubricants, and small tools, but you might also think of it as the condiments that are used for our McDonald's hamburger. They're just too darn small to be traced. Direct labor costs, well, that's the labor that can be traced to the output, right? So that's the labor of the person who works in the kitchen, who prepares the burgers, who fries the burgers, right? The wages plus a reasonable allowance for non-productive time is the direct labor cost associated with that hamburger. Whereas indirect labor costs, for example, our cashier, are costs that cannot be readily traced to outputs. So we think of those as manufacturing support costs. So supervision, quality control, inspection, etc. So all indirect costs for the manufacturer, including indirect materials, indirect labor, and other indirect items, are often combined into a giant cost pool known as overhead. Sometimes we'll call it factory overhead or indirect manufacturing costs. There are the three main types of costs, therefore, right? Direct materials, direct labor, and overhead. And we can even condense those further and think about prime costs as being direct materials plus direct labor, and conversion costs, that's the cost to convert the raw materials into a final product, that's direct labor plus overhead. So cost drivers provide two roles for the management accountant. The first is they allow us to assign costs to cost objects. They also explain cost behavior, right? So how does that total cost change as the cost driver changes? So in a simple example, we would say something like, how does the number of hamburger patties increase the total cost, right? So you would think of that as saying, okay, well, that's a pretty simple cost behavior. With each increase in volume, there's an increase in cost, and it's fairly linear. So there are four types of cost drivers. There's activity-based, volume-based, structural, and executional. So activity-based cost drivers are developed at a detailed level of operations using some analysis of the activities performed in that business. And a cost driver is determined for each activity. Now, that's not entirely true, right? Because some activities, you might say, well, look, I can break that activity down and maybe it's worth it to determine a cost driver. But on the other hand, maybe it isn't, and I can lump that in with some other activities that will allocate the cost collectively. So it could be that the cost individually is just not material. So volume-based cost drivers are ones that relate to the amount produced or the quality of service provided. And there's no doubt in my mind that in your fundamental managerial course, you would have spent a lot of time around volume-based cost drivers because those are really obvious choices, right? The relationship between the driver and the cost is linear within some relevant range. Structural drivers have long-term effects on total cost. So think of those as scale or technology. So technology is a great example, right? So if I can currently pour X number of soft drinks at McDonald's per hour, but then I determine a way to automate that based on the order taking process so that now there's a machine that receives the order and automatically pours it. That technology is a structural driver. It's going to have a long-term effect on the total cost of getting that drink ready. In the short run, it has no effect, right? But you can see that replacing the human beings that may have had to pour that drink with the machine that now does it, that's a technological change that changes the way costs are being aggregated and delivered to the cost object. Executional cost drivers are for short-term operational decisions. So, for example, a production process design. Oh, why don't we move the cups over by the drink machine? Or a supplier relationship where we're able to negotiate a better price on some of the supplies we buy. Those are executional cost drivers, and we might have some short-term control over those. Okay, so we think about these volume-based cost drivers, right? Again, these are the most common, and we think about different types of costs within that scenario. So a fixed cost is the portion of total cost that does not change with changes in output. And again, that's over a relevant range. A variable cost is a cost that does change with each change in the quantity of the cost driver. So for example, think of the rent for the McDonald's. That's a classic fixed cost, right? It doesn't really change no matter how many hamburgers I make that day. Whereas the cost of the patty, that's a variable cost that does change with each change in quantity of the cost driver. A mixed cost is used to refer to a total cost that includes both a fixed and a variable component. And step costs vary with the cost driver, but do so in steps. So that could be, let's say you have a grill and you can cook 12 patties on the grill. Well, the second I need to make more than 12 patties, then I need another grill. And as a result, the total cost of those grills would increase the second I go over 12 patties. So that would do so in steps of, think of it as every 12 patties. Okay, so here is a graphic depiction of what total costs would look like. And you can see how the two lines between 35 and 3600 represent the relevant range. And it's more or less linear within that relevant range. So this is what fixed costs look like, right? So between 35 and 3600, there's actually no change in the cost because it's a fixed cost. A variable cost, on the other hand, increases. So when we think about the variable cost, that's the blue shaded portion. But we can see that the intercept on this graph intercepts at 3,000. That was our fixed cost, right? So our total cost can never go less than our fixed cost. But if we created no units, in theory, we'd have no variable cost. But as we increase the number of units, the variable cost in total increases, thus our total cost also increases. So we can also classify costs a couple of different ways. The first is product costs, and we've been spending a lot of time talking about product costs already. These include only the costs necessary to complete the product at the manufacturing step in the value chain, right? So that's the manufacturing part, or to purchase and transport the product to the location of sale, and that's in a merchandising business. Period costs, or non-product costs, are basically everything that isn't a product cost. So that's the costs incurred in managing or selling the product. So that's costs outside the manufacturing step of the value chain. Okay, let's play a little classify that cost. Okay, so we're going to determine whether these are product or period costs. And if it's a product cost, is it direct or indirect? Okay, so let's start with our first one, income taxes. So we should think, does income taxes vary with respect to how much product we create? And the answer is generally no. That's just a period cost. How about property and casualty insurance on the factory? Well, If it's on the factory, then that's pretty much a product cost. And because really insurance isn't necessarily associated with the volume of what you're making, that's an indirect cost. Supplies used in manufacturing. So think of this as kind of the oil for our grill or for our fryer at McDonald's, right? So we don't really trace that to each set of fries we make, but it is a product cost. So that's product and indirect. Wages for employees in the assembly department, well, that sounds pretty much like it's associated with the product itself, and we can tie that directly to each assembly that we do. So that's a product and direct cost. Wages for employees that deliver our products to customers. Well, again, if this is a manufacturing business, then that is a period cost. The cost to deliver is not part of the cost of manufacturing. Whereas rent for the retail store, so this is where we're selling our manufactured goods. And again, we're not thinking of this as a retail business, but rather a manufacturing business. That is a period cost. Depreciation on the accounting department's furniture. Well, that has nothing to do with the product, and that is a period cost. Factory supervisory wages. Well, this is the cost to supervise the laborers in the factory. Well, that's product related, but it is an indirect cost. And then lastly, we have the CEO's salary. The CEO's salary is generally thought of as a period cost. Okay, let's classify some more costs. So in this case, we're dealing with a business called Clear Pools that manages and maintains pools at various locations around the county for swim clubs, cities, and other organizations. And Clear Pools provides management, lifeguards, cleaning, pool chemistry, and other maintenance on the pools. Okay, so we're going to do the same thing, except now we're going to classify these costs as either direct or indirect. And we're going to classify them as either variable or fixed. Okay, so first, pool chemicals. So pool chemicals seem to be pretty clearly directly associated with the service that Clear Pool provides. And probably the more number of pools they serve, the more chemicals they have to use. So that's direct and variable. Now, if the pool chemicals are fairly low in cost and there's an indiscriminate amount used, so it's more of an estimation method than an exact method, then you might call that an indirect cost. So lifeguard wages, well, again, these are associated directly with the number of pools, and so that is a direct cost and a variable cost. Lifeguard training is not directly associated with the number of pools, so that's indirect, but it would vary with the number of lifeguards, right? So if you need more lifeguards, then clearly you're going to have more training costs. pH testing supplies. This is a little bit like pool chemicals, and so as a result, I view that as direct and variable. So then we have the Clear Pool manager salary. So think of it as each pool or each set of pools probably needs a manager, and those salaries associated with the manager are an indirect cost and probably viewed as fixed, meaning at a minimum it would be step, but probably fixed because probably you distribute managers across a number of pools. Chlorine tablets, that's a lot like pool chemicals. I'd view those as direct and variable. And then depreciation on the pool cleaning equipment. Again, within the relevant range, we probably don't have pool cleaning equipment for each pool, but if we did, that would be variable. But in this case, I view this as an indirect cost, and it's probably fixed because depreciation is a fixed charge over time. Okay, so now let's do an example of some cost behavior to help us better understand some of these classifications. So Artie Smarty's having a party, and he rents out a party room for $1,500. And he expects his food and drink cost to average about $20 a person. So what are going to be the total and average costs if only one person attends, or 100 people attend, or maybe 200 people attend? Okay, so if only one person attends, then his total cost is the $1,500 of fixed, plus the 1 times the $20 of variable cost per person, or $1,520. And therefore the average cost is pretty easy. Since only one person is there, the total cost is the average cost of $1,520. If 100 people attend, Well, the fixed cost remains the same. That's still $1,500. He doesn't need an additional party room. The one party room is enough for 100 people. But now his variable cost is 100 times $20 per person. So now his total cost is up to $3,500, and the average cost is now dropping down to only $35 a person because we are allocating that fixed cost across 100 people now instead of just one. At 200 persons coming to Artie's party, the $1,500 remains fixed, but now his variable cost is 200 times $20 a person. So his total cost is up to $5,500. But you can see his average cost continues to drop and is down to $2,750 per person, which is just the $5,500 divided by 200 people. Okay, that brings video M3A to a close. The next video is a review of job costing. Thanks for watching.